So today we're going to be looking at a space exploration ETF by ARK Invest called ARKX. Now you would have heard the news recently about Jeff Bezos and Richard Branson blasting off into space, and I thought it would be pretty appropriate to make this video. Now since they've done this, they've essentially inspired and excited millions and millions of people around the world. People are starting to talk more about space exploration, and they're getting more and more excited to kind of look at this space and think about the future of humanity, 10, 20, 30 years down the track. Now, not to mention, of course, millions and millions of people on the other side of the spectrum have also been criticizing these billionaires for kind of showing off their wealth and doing these crazy things while the rest of the world essentially suffers from the effects of coronavirus and all this inequality that's going on. But in this video, we're not going to focus too much on the negatives. We're just going to be looking at the positives of space exploration as an industry and some of the trends that we've been seeing moving forward. Hey guys, my name is Fyzee and this channel is about finance and investing. Before we begin, as usual, this video is not financial advice. I'm not a financial advisor. Please do some research on your own as well. This video is simply based on my research, so make sure to do yours as well. Let's get into it. So before we talk about ARKX as an ETF, we're first going to talk a little bit about ARK Invest, which is led by CEO Cathie Wood. Now, because of her and her predictions, her ETFs have delivered insane returns for investors in the past. And because of that, they have beaten the market for sure. And Cathie Wood has basically made some huge calls, and she has been right many times when other people have criticized her for making these insane predictions, and a lot of them have actually come out to be true, which has surprised many people around the world. So she's definitely someone who's worth listening to, and ARK Invest essentially has lots and lots of actively managed ETFs, and the special thing about them is that the only thing they look for, which is the main trend that they're looking for, is innovation among anything else. So basically what that means is that they're looking to invest specifically in companies that are innovating quite rapidly, and they're set up for the future, and they're essentially disrupting the whole status quo that's been happening at the moment. So if the company is doing that, ARK Invest is going to invest in those types of companies. And because of that, they have a lot of ETFs ranging from different sort of sectors like robotics, innovation, genomics, fintech, and recently space exploration, which is of course the topic of this video. So looking at ARKX's overall investment objective, the overall objective is to get that long-term capital growth, and this is not an income-based ETF at all. It's only for that sole capital growth over time as companies start to benefit from space exploration. So basically what that means is that this ETF is going to benefit quite greatly when the space exploration industry starts to expand even more in the future. Now, once again, this is an actively managed ETF, which means that every single company in this ETF holdings list is carefully chosen. The team has done so much research behind it and behind those picks to ensure that these companies are positioned very well into the future for space exploration and that sort of movement. So because of that, the fund is planning to invest about 80% of their assets into domestic and foreign companies that fit this kind of theme. And it's very important to note that this ETF doesn't just include leaders in this space, but also companies that are enablers or companies that will benefit from space. So what that basically means is that the companies held in this ETF aren't necessarily going to be companies that are planning to go into space directly. There could be some other companies as well, like for example 3D printing. So companies that operate in 3D printing and companies around this industry are obviously not leading the space exploration race and the space race at all. However, these types of companies are benefiting and will continue to keep on benefiting from space. Let me give you an example. Let's take astronauts in the International Space Station. As you guys can see, right? This space station is many miles away from the surface of the Earth, and if a part breaks down on the space station and they need to bring the part from Earth to the space station, that is going to cost an immense amount of computing power, resources, individuals, money, and like a lot of resources basically, right? So it is not feasible to bring those physical parts from Earth to space into the space station every single time. It is just way too costly. However, if you can use 3D printing and you can basically install a 3D printer inside the International Space Station, whichever part that you need to be repaired can literally be like manufactured inside the space station, and you can get the part and you can essentially just repair it inside the space station, right? And based on this article, that's exactly what astronauts have been doing. So they've essentially been recycling, reusing, and just repeating this whole process to ensure that the ISS can be as self-sustaining as possible, right? So as long as you have the actual plans, the building plans and the schematics of the individual parts, you can literally just create anything. So that's just one example of how insanely beneficial space could be for 3D printing, because you don't need to spend many resources. You just get a space printer, a 3D printer, you just chuck it into the ISS space station, basically program it to produce whichever parts that you need, make the parts and just install it, right? So that saves so much time, it is so much better, and it's definitely more cost efficient as well. Looking at some examples of the companies that are included in this ETF, we've got orbital and suborbital companies that essentially launch/make vehicles or satellites into space. We've also got enabling technologies, which are essentially companies that add value in the aerospace operations, so companies that can essentially enable that to happen. And in this space, we have AI, robotics, 3D printing, as we spoke about, energy storage as well. So of course, with energy, you've got the insanely large solar panels on the top of the ISS. You've got those 4 kind of domes there, not domes, but you've got 4 like these arrays there. So of course, energy storage is very important to make the ISS as self-sustaining as possible. And then lastly, you've got aerospace beneficiary companies as well. So essentially, these are companies that derive benefit from aerospace activities like GPS, imaging, drones, etc. Now guys, if you just zoom out and if you look at the world from an outside perspective and you look at it from a holistic perspective, we've basically explored everything there is to be explored. We have found out where all the countries are, we've mapped out the entire world, we've seen the entire geography of landmass everywhere around the Earth, and the next frontier for us to explore is space, right? That's the only kind of thing that we haven't really explored, and that's the next frontier. Now, surely you could argue that we haven't really seen what's at the bottom of the ocean. We haven't really explored, what sort of, species and undiscovered species of fish and whatever lurks down there is down there. We haven't really explored that because it's very hard to do. There's no light and whatnot. But if you ignore, exploring the deep oceans, exploring space and deep space is kind of the next frontier for us. And it's basically the next step for humanity. And it's what really excites all of us, I would say. So you can really see why this sort of industry is so important moving forward. Now, guys, let's look at the returns for this ETF. But as usual, if you have found any sort of value so far in this video, I would really appreciate it if you could leave a like or even subscribe. That really helps out for the YouTube algorithm. Thank you so much. Let's get into it. So looking at the rough 1 month return for the ETF, it is sitting at negative 4.5%, and looking at the absolute maximum return for the ETF, it is negative 3.3%. Now, this only listed on the 30th of March, so of course we don't have a lot of data for it, and we can't really look at an index for this ETF like we usually do with other videos, where if the price data is like less than 1 year old, or if it's like a very new ETF, we just look at the ETF's index directly and kind of just map out what the returns for the ETF will kind of look like. But with this ETF, since it is a fully actively managed ETF, there is no really underlying index that we can have a look at, so we can't really judge the performance moving forward. Now, looking at some high-level information for the ETF, the ticker is ARKX, as we spoke about earlier. The fund type is an actively managed equity ETF. Now, the primary exchange that the ETF trades on is the BZX exchange. Now, that's a bit different to what we're used to with the New York Stock Exchange or the NASDAQ. But this one is the BZX exchange. Now, for us investors, it doesn't really matter too much because you can usually buy this ETF from any broker that has US shares listed. Now, personally for me, if I was to buy this ETF, I would use Stake because they literally offer no brokerage to buy US shares and ETFs. So that's very different to if you were to buy shares and ETFs in the ASX, because you do have to pay that brokerage. So that's a very refreshing model to use. Now, if you guys want to check out this platform, there should be a link in description, and you and I can both get a free stock of GoPro, Nike and Dropbox as well, so go check it out if you're interested. The inception date is the 30th of March, as we saw, so obviously we don't have too much price data, we can't tell much just on that, but hopefully over the next couple of decades moving forward, this should be interesting to see where this ETF ends up and what happens to space exploration moving forward. The net assets are 627 million, and the expense ratio, which is basically the management fee, that is 0.75% per year, which basically is $75 per $10,000 invested, and that's not too bad for an actively managed ETF. Some ETFs that we've seen on this channel that we've kind of reviewed have management fees of over 1%, and they charge a performance fee as well when they perform over the benchmark that they're trying to beat. But of course, in this one, the fee is low to begin with, and there's no real benchmark for them to outperform against, so there's no outperformance fee, so the fee is actually not too bad. And the reason why this fee is obviously higher than other kind of broad market ETFs is because there is a lot more effort required to constantly monitor those companies, make those trades and whatnot. So you can obviously see why the fees are so high, and judging by Cathie Wood's past performance of her ETFs, it may be worth paying those fees. Now, the holdings for the ETF will fluctuate between 40 and 55 depending on what sort of companies get added in and what sort of companies get sold, but roughly that's what you can expect. Now, speaking of holdings, let's actually have a look at what the underlying companies are in this ETF. So at the start, we've got Trimble at about 9.68%. Then second place, we actually have the 3D printing ETF, which is just Cathie Wood's ETF, which is another ARK based ETF. So it's basically an ETF inside an ETF. So that's pretty interesting. And there's lots of names on here that I have no idea about, like Thales and Komatsu and some other random names as well. We've got Lockheed Martin, which is a huge defense company. We've also got Alphabet, which is Google, and Amazon is also included in this list. It's just not in the top 10 holdings at the moment. Now, looking at the rough technology breakdown of the ETF, we can see that it leans very heavily towards companies that benefit from the overall activity of space exploration. So it's about 42% geared towards that. We've also got enablers at 25%, orbital and suborbital at about 30%. So the actual companies that are going to be going into space is only 30% of the overall ETF. Because you have to understand that to make space exploration happen, you can't just have companies that are going into space. There are so many like clusters of companies around the overall trend of space that enable space flight to actually happen in the first place. So you have to have a bunch of companies to kind of have the ultimate goal of space exploration. The sector breakdown leans heavily towards industrials at 44%. Then we have IT at 22%, communication, consumer at about 10% roughly, and non-classified as well, which is just a bunch of random industries combined. And lastly, looking at geography, we have 75% roughly towards North America, 15% Asia, and Western Europe is 9%, Africa, Middle East at about 1%. So not surprised here, it is very heavily leaning towards America and North America in general. So you can really see how interesting this space, cheeky little pun there, actually is. And I'm quite interested to know if you knew about this ETF already and if you've bought into it, or if you've bought into any other ARK ETFs as well. Personally, I have not bought into ARKX just yet. I've only bought into ARK, which is the innovation ETF. But of course, this is not financial advice. Do not buy into this ETF just because I've bought into it. And we're going to be looking at some more ARK Invest ETFs in the future as well. Let me know which ETFs you want me to have a look at first. Until then, you can check out the cloud computing ETF by BetaShares, which is mentioned in this video. This is going to be hopefully a mega trend in the future as well. And this is a robotics and AI ETF from BetaShares. These two are hopefully going to be two huge mega trends going into the future. So check these two videos out. And guys, thank you so much for watching. Please like and subscribe, and I'll see you in the next one. Bye now. But of course, this is not financial.